1. High fees and charges. Maintenance fees. Banks may charge monthly maintenance fees, especially for checking accounts that don't meet a minimum balance requirement. These fees can range from a few dollars to $25 or more per month. ATM fees. If you use an out-of-network ATM, the bank often charges you a fee, sometimes $3 to $5 per transaction, plus the ATM operator may also charge a fee. Over time, frequent ATM withdrawals can add up significantly. Overdraft fees. Many banks charge hefty overdraft fees, often around $35 per occurrence, when your account balance falls below zero. This can quickly become a financial burden, especially if it happens multiple times. 2. Interest rate manipulation. Savings versus borrowing rates. While banks may offer very low interest rates, often less than 1% on savings and checking accounts, they charge much higher rates on credit cards and loans. For instance, credit card APRs can range from 15% to 30%, meaning banks make a significant profit on lending. Invisible fees in loans. When taking out a loan, interest rates are just part of the cost. Banks may also tack on other fees, like origination fees, processing fees, and prepayment penalties. These fees can increase the overall cost of borrowing significantly. 3. Account downgrades. Automatically downgrading accounts. Some banks will automatically downgrade your account to a lower tier account if you don't meet minimum balance requirements or if certain conditions aren't met. For example, you might have a premium checking account with benefits like waived fees or higher interest, but if you don't maintain a required minimum balance, the bank may downgrade you to a standard account with fewer perks and higher fees. Unaware clients. Many customers are unaware of these downgrades until they notice that fees have increased or benefits have disappeared. It's important to regularly check the status of your account and ensure you're meeting the required criteria. 4. Lack of transparency on loan terms. Loan bundling. Some banks bundle high-risk loans like personal loans or subprime mortgages with lower-risk loans like prime mortgages to make the overall loan offer seem more attractive. While the total interest rate may look reasonable, some parts of the loan can carry much higher interest rates or unfavorable terms. Hidden fees. Fees associated with loans, like application fees, processing fees, and early repayment fees, might not be fully disclosed upfront. These can increase the total cost of the loan beyond just the advertised interest rate. 5. The power of compounding. Compounding on loans. Banks earn money through compound interest, especially on credit cards and loans. For example, if you have a balance on your credit card that compounds monthly, the interest added each month builds on the original balance as well as the interest from the previous month. This can result in a snowballing effect where your debt increases faster than you might expect. Low interest on savings. Conversely, the interest rate on savings accounts is often very low, sometimes less than 0.5% annually. Even if banks are earning substantial profits from loans and credit cards, they typically don't share those profits with savers. It's important to shop around for high-yield savings accounts if you want to earn more interest. 6. Loan prepayment penalties. Why prepayment penalties exist. Banks make a significant portion of their revenue from the interest on long-term loans, mortgages, car loans, etc. When you pay off a loan early, they lose out on the interest they would have earned. As a result, some banks impose prepayment penalties to discourage early repayment. How it works. Prepayment penalties can be a flat fee or a percentage of the remaining balance. They can sometimes negate the benefits of paying off your debt ahead of schedule, so it's crucial to check your loan agreement to see if there's a penalty and how much it could cost you.
iterambere jari SCPLC. Iki ni ikigo cy'imari iciriritse kibarutswe na Jari Investment Limited ku ishoramari rya RFTC. Umudende wacu ni ukuguha serivisi nziza kandi zihuse kuko dufungura konti ku buntu. ukabitsa ukabikuza ukizigama ukungukirwa. Akarusho kandi abashoferi, abamotari, amakoperative n'abacuruzi nitwe ba mbere tugufasha ukagera ku nzozi zawe ugatera ishoti ubukene. Ayiwe mama, abanyamishahara mwashyizwe igorora kuko tugukubira inshuro 16 zose. Erega turacyari ku isonga kuko igiciro cy'inguzanyo iwacu kiraciriritse. Tugane tugufashe kuko iwacu hariranga. Ni Nyabugogo mu nzu y'amashyirahamwe Modern Market ku muhanda ujya Kimisagara ahateganye na Wasac. Mwavunyisha kuri 0788 30 71 84.